Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about home prices hitting an all-time high even while mortgage rates stay elevated. Logan, welcome back to the podcast. Oh my gosh, on this day when we're talking about home prices, all-time highs.
Yes. The unfortunate reality of credit channels running inventory channels, the benefit of having very solid homeowners, right? Nobody has to be forced credit sellers or anything like that now, but also the reality of having home prices hit another all-time high, Case-Shiller Index. Was August 27th, 2024. And this was the whole framework of all of our economic discussion. When we first started to work with each other in 2020, number one, of course, for those who don't know, we wrote a COVID-19 recovery model on April 7th, 2020, telling people that, the US is going to recover this year, but also moving along to, oh my God, we've got a problem. Like the simple way to kind of explain this to everyone listening is existing home sales broke to pre-cycle highs before COVID hit us. So we're up here on the demand curve, except the inventory data broke to all-time lows. So demand is up here, but that inventory is here all the way. It's not like existing home sales were trending kind of around 4 million. We were pre-cycle highs. So the supply and demand equilibrium means that you're going to have too many people chasing too few homes, right? This isn't like the late 1970s or early 80s when home sales went from 2 million to 4 million down to 2 million again. We were near 6 million existing home sales right before COVID hit us on the monthly prints. And that's a problem. And now that we're here, August 2024, home prices hit all-time highs. The frustration, I get it, right? About, recent bias about, well, aren't home prices supposed to crash just like they did during the housing bubble? Well, if you're using a housing bubble method, you have to have the same kind of variables in there. And none of that is here, right? None of these things that were relevant to the period in time back then are in the data line sets. And you don't have to be an economist. You don't have to be a data analyst. You just have to be a functioning human being that could read and see, right? We don't have those things. So it's frustrating. I could just see the frustration because rates are very elevated still in relationship to where they were in the last decade. And we've gotten to the point to where the government is trying to step in and try to stimulate home sales because it is literally the third calendar year of the lowest home sales ever. And part of this is home prices escalated out of control. Then rates went up higher and faster than anything. And now you have other variables into play, property taxes, insurance, all of them together. We call them the PITI, total principal, interest, taxes, and insurance. The whole cost of housing is expensive. And it's not an easy thing to fix. This was the whole, hey, hello, McFly, everyone, why are you all worried about home prices crashing, on a national basis? Come on, look what's going on here. And this week I could just see the frustration or it's just hitting, we got to do tax credits, or we got to do this. It was something to stimulate, and it's just not an easy problem to fix.
It's not an easy problem to fix. So, back in 2020, when you first started writing for HousingWire, as our lead analyst, one of the things that was like a theme of yours was the demographic trend of those millennials hitting their peak home buying age, right? Years 2020 to 2024 was something that you talked about a lot. And then, everything kind of got crazy with COVID and with, buying a house was so competitive, and then, rates and home prices going up. So I feel like that whole cycle got interrupted, right?
Sure.
So yeah. So let's talk about the demand side for a minute and, what's normal, what maybe we're still lacking from the last couple of years when people couldn't afford homes. Where are we on demand?
When I say the third calendar year of the lowest home sales ever recorded history, I'm not trying to be, overhyping a situation. When we take the civilian workforce, the total population, having existing home sales around this 4 million level and staying here for like 2 years now, like this is not like, we've not been able to kind of break above. We're missing basically about 4.2 to 4.7 million in demand currently. So that's the accumulation of having 1.3 to 1.7 million existing home buyers in here. That's just not part of the equation, and it's just not the case here. Just because home prices escalated out of control and rates out, and then you have qualified mortgage, which means you have to be able to own the debt, right? And it's just not one of these things that you fix so easily. Because rates have to come down. Like I always compare this to the early 1980s. Like we always do our purchase application data threads on Wednesday mornings, and I say there's one time in history where this looks exactly the same. The early 1980s, home prices escalate out of control, rates escalate out of control, home sales crash, affordability was terrible, home prices didn't fall. But the only thing that changed this was rates falling 2% plus and heading lower. So it's just very similar to the baby boomers back then in that context. And we just have so many homeowners doing really well. If you can't qualify, you don't move. And do you really need to be forced to move either? And they're just not there. So we're here with low inventory, low demand, bad affordability. Tough problem to solve unless rates fall, because the pricing, obviously the history of home prices going back to 1942, it is extremely rare in history to have nominal home prices fall. Especially if you take the 2007 to 2011 equation out of there, it only happened 1 year on a national basis. I don't care about real home prices or prices in gold or barbaric home prices. Nobody gives about any of that. It's just a very, very difficult problem to solve. And that was the whole fear toward the end of 2020 that, hey guys, this can get really bad very quick, because I don't think anybody understood how bad the active listings were back then.
Well, and you were saying, we need higher rates to cool down home prices. And, of course, we didn't get that in 21. And it was just crazy. We did get that in 22, but I don't think it did quite what we thought it would do.
Well, higher rates did. I know there's this debate about, well, home prices are still rising. We have to remember, if rates didn't go up in 2022, we were heading toward 17 to 19% home price gains. That's where we were early. So for those that are new here that might not remember, I threw up the towel in February. I said, I don't. This is terrible. This is the worst. Literally the worst housing market I've seen post 2010. Not because demand was crashing or home prices were escalating or credit. It's just we had too many people chasing too few homes. I think 78% of the homes were getting multiple bids. I said, we have to, there's nothing else we can do here but higher rates. Now, we did get higher rates. We got elevated rates. Imagine if mortgage rates just stayed between 4 to 5%, and so we needed to create a buffer, right? The whole higher rates creates higher inventory. We see this year. We see this in 2022. We saw it in 2023, the second half. It's created a buffer for us. So if rates do fall, if the economy gets weaker, now we have a little bit more choices. This is the positive story of 2024. But it's an unfortunate reality. But in the history books, 100 years from now, they're going to go back and go, wow, there was only 240,000 single family homes available for sale in March of 2022 in a country of, over 330 million with over 155 million people working back then. And just, here it is. That's not a healthy, that's not a functioning housing market. But now finally we have more choices, right? We showcased our Altos data where about 8 states in America are at 2019 inventory levels. My theory is always that if rates stay high enough, long enough, and demand gets weak, you can get back to 2019 inventory levels. It's only happened for 8 states. And let's all remember this. 2019 inventory levels were the 5-decade lows before 2020. It's like not some magical number. Everybody goes, oh my God, it's 2019 inventory levels. It's just you have a functioning marketplace in that. That's how I look at it. And in that context, we're about, even if I wanted to use the NAR data, we're 190,000 kind of away from breaking into the low points of 2019. So it's unfortunate. I see the frustration. It's also something very difficult to solve quickly. Time, right? Only time. Wages grow, household formation grows, rates fall. Something like that actually make it. But if people were thinking about, well, we're going to have 50 million homes in distress, and we're running into foreclosures and everything. And I always showcase this. I try to teach people this on social media. If I was going to die in 30 minutes, okay, the one stat I would show you all is our new listings data currently, right? The tracker comes out. The tracker is here to teach you guys how to read housing economic data. The last week was roughly 65,000 new listings data, seasonal decline period. In 2010, this thing was running at 365,000, right? In a seasonal decline, the seasonal peaks pre-COVID, let's say from 2013 to 2019, the seasonal peaks of new listings was 110,000. Usually it's about 80 to 110. So the last 2 years have been abnormally lower than the trend. Back then it was 365 forced credit sellers, but back then, 23% plus of the homes were underwater. Here it's 1.8%. So you put all those variables in together and you think to yourself, well, that was a forced credit seller market, foreclosures, into an underwater marketplace. And here you don't have an underwater marketplace and you have no sellers. A 4-year-old child can understand this. I can literally teach a 4-year-old child this and they will get it. But there are so many people out there that just for some reason cannot let a period in time go that has no relationships to housing or US economic data over 80 years. It's just the world we live in. So it's frustrating. I get it, but it's also, this thing gets cured by time. And eventually it works itself out, but it's a very hard thing to get any kind of quick fixes in.
Well, and so much of this is, if you look back, the builders got so burned when you have, 360 whatever thousand coming on the market, new listings. You do not need new home sales. So I think, the legacy of that, where the builders were like, we will only build, their model is very tight. They're not going to flood the market in any way. They got totally burned. Now all this time later, that we have less inventory than we need.
This is an interesting subject because this was talked about this week. Why are housing starts at COVID-19 recession levels? Right? Like, why did this happen? Like, how is this? We need millions of homes, right? We need millions and millions of homes to be built, but permits are at recession levels, starts at recession. I have a much different take than anyone else.
All right, tell
The
me.
builders do not build to fix society ills. The builders build to make money, right? So naturally, new home sales adjusting to population is below the recession levels of the tech recession in 2000. It's not a lot. They can still keep things going by paying down rates, but imagine if there was no rate pay downs. We're at recession. We're at worse levels than the recessionary levels today. So we don't have a functioning system in place for that. So the builders are going, hey, listen, if I have all this cost, I got to make money to do this. If I'm not making money, why would I build this? Then you have the yes in my backyard. Build everything. Build. Have you guys ever run a business? No, of course not. It doesn't work that way. So it's a frustrating aspect on that side because I keep on seeing people, we're going to build millions of homes. No, you're not. You're cute. Adorable. Oh my God. You're just so little adorable people telling me you're going to build millions of homes. And this is the thing in the last decade, right? Everybody's like, we're going to build millions. It's the weakest new home sales cycle ever recorded history. It was the weakest housing starts ever recorded history. And if you timeline sales and starts and permits, oh my God, it is a beautiful, fluid sexy tango couple dancing that never stops miraculously, right? So,
So
um,
here's something that you and I hear when you are out speaking. We talk to people. Sometimes we run into people who feel like the solution is all the homes in America that stand vacant because they're in such poor shape and they're so out of code and they're just in bad shape. And they're like, that's the key. That's how we could get more homes online. What is your reaction to that?
if I had a dollar bill here, I would be showing it, you know. Thankfully, there are real estate investors that are willing to like rehab homes, fix them up, rent them out, or sell them. But if you were serious about this, like if you really wanted to be serious, like imagine, first of all, nobody should be an omnipotent, all powerful person, right? The power should not be given to one entity. But let's just say I had this power. I would basically I would have to have the military or something, everybody come in and work to rehab everything and do deficit financing by the government to pay for the stuff. Because whatever we're doing right now is not working, people. Right?
Right.
It's just not. It's not working. It's like I'm taking my crazy pills again. I'm literally sitting there on social media, and all these people are. We're going to build millions of homes, and I'm like, oh, it just doesn't work that way. So you have to change the game about getting. So here's a good example. What changed the construction patterns of the United States of America to produce something? Sarah Wheeler, what event would you think that changed the entire landscape
What timeline are we talking about?
in the last 90 years?
I don't know, Logan. What
World
is
War II.
okay? Okay, yes. All right. So the
World
housing
War
boom
II.
after
We're like,
after World War
oh,
II.
we need to build tanks and this and that. Okay. Unemployment rates were like one under 2% or something like that. We have to, we don't take that. We don't do that approach, right? The builders would hate that, by the way. It absolutely destroyed their entire business model. But you'd have to get something like that. That's why we wrote that article in 2021. We're like, you guys are all cute and adorable. Trust me, when rates go up, the whole thing's going to come down. Here we are. Housing starts. So it's a difficult problem. I could just like this week I can see the frustration that home prices are at all time highs again. Rates are high. We're doing a $25,000 tax credit for first time home. This is what happens when you have the third calendar year of the lowest home sales, and we don't have what we call a deflationary economy, right? The economy produces inflation. A growing economy is inflationary, right? The deflation is something with a tragic, sad economy. There's not enough demand. So the demand is there and people live in their homes. This is not like, it's not a Bitcoin or, a stock or anything like this. You actually live in there. You raise your children in there. You go to bed, you wake up in the morning, you eat, so frustrating. I get it. It's just one of these things where it's people just going to have to endure. There's not a lot of quick fixes. Now, of course, hypothetical, let's just say I woke up the next morning, mortgage rates hit 4%. I don't think that's going to happen, but if it did, what happens? Demand rises. We saw that in the early 1980s. Rates went lower and lower, and even with affordability, bad demand, because the cost of housing, right? That's the fastest variable there. And then you get a little bit more demand rising up. But if we're talking about deflationary economics, you have to do like almost like a World War II mobilization to really produce. But we don't. We talk a lot. We talk so much, right? You can build apartments in 5 units and stuff like that a little bit more freely in a different environment if you have funding. But we always say this, the people that make money in this country, they love single family homes, right? And the builders know this. They build very nice, beautiful single family homes. And the builders are doing an excellent job going, hey, everyone, 4.75% mortgage rate here, brand new house. Look at that home run. Look at that carpet. That's 1975 carpet. Oh, it's not good. Here it is. Look at our kitchen. Look at our kitchen. Look at that. Oh my, look at that kitchen. No, not good. Right. So advantage, disadvantage to builders are what I call efficient sellers, right?
They
They sell
are.
homes. They sell homes as a commodity. They have no love relationship with their furniture or one bedroom or whatever, right? They sell homes efficiently because it's a commodity to them. And then the existing home sales market doesn't have that kind of luxury. So it's again, and not the easiest. And as we're here, this is 2024. We're closing the books out, right? And um, we're still dealing with the housing inflation that we were worried about toward the end of 2020. That this can get out of hand. Of course, none of us thought mortgage rates would be getting to 7 to 8% back then, as the economy was, recovering back. But it's a historical period. I find it fascinating that the one period in my life that I was waiting for 10 years ended up becoming this very historical period. And I was like, oh God, oh,
It's
this book,
crazy. It's
this
crazy.
book, this documentary about years 2020 to
So
all of it.
you're doing a chef's kiss for those who are
Yeah.
listening. You're like, what is going on? So one of the things, put on your LO hat here for a minute, right? You used to be a loan officer back in the day. Your dad's still a loan officer. We know tons of real estate folks out there, and you've got consumers going, what the heck? So now we have even higher home prices, because one of the things people are trying to figure out is like, do I wait for rates to come down? But like, it seems like it just keeps getting more challenging. Like, how do you outrun the home price gains if you're a consumer waiting for the rates to come down?
You can't. You can't. And with qualified mortgage, you couldn't even think you could outrun it because, back in now everyone has to pre-qualify, right? So we're still going to have near 500 or near 5 million total home sales this year. We're still going to have a little bit of a 4 million total home sales in existing home sales market, 700,000 new home sales. So there are people there. There's still people buying and selling homes. But when rates fall, again, if you're an LO or anything, you have to remember, if you're talking to a potential buyer, you just got to keep them constantly informed about where that total payment is. Because once rates fall, let's just hypothetical, let's say rates fall 1.5% and stay lower, that buyer pool picks up. The new home sales people are doing it, right? They're getting people in. If you look at their purchase application data, it's not that far off of the high levels of 2020. But eventually, you get people, but you have to get people into that total payment, because that's the only thing that matters, the total PITI cost. Because that if you don't qualify for that, you're not getting a loan. Sorry, Charlie, it's not how it works anymore. So constant information about prices and rates and total cost, total PITI cost. That's the thing. That's how you have to get your potential clients and everybody ready, because there is no other side to this equation. You're not getting anything. Now, a lot of people say to me, well, how is it possible that we even have this many home sales? Everyone has to remember, when we talk about housing economics, there's kind of like the 5 pillar of demand. There's first time home buyers, move up buyers, move down buyers, cash buyers, investors. When you talk about people that are selling equity, right, they have bigger down payments. And remember, the older you are in life, the more your wages are. Your wages grow over time. Your peak earning years are 45 to 54. In some cases now, it's now in your 60s too. So there's baby boomers buying, there's Gen X people buying. Their total wages, their household wages are a lot higher. And then they have selling equity. So to them, and this is a good lesson, the affordability crisis doesn't impact this group of buyers as much as the marginal home buyers. And this is why we've kind of been at this format. Like today, purchase application data came out, positive 1%. We've had the best 12 weeks in purchase application data in 2024, but it's 7 positive, 5 negative, not much, but it's there. It's not like it's crashing. See, if home sales were crashing again, you have a different equation. But these groups are here. So you do have buyers in there. But when rates fall, you have to make sure that they know where they qualify, and then go with it, because that's what happens. We always see this as rates go down. This is now the third time mortgage rates have fallen down. Each and every single time there's been a positive purchase application data flow. There's no longer a negative, right? In some cases, it was much stronger in 2022 and 2023. Here, non-seasonal time, it's a little bit positive. So you do have that potential there, but the existing home sales market has not been able to breach under 6%. In scale terms. The new home sales market, yes. Their purchase application data is much different. But in this situation, when the time comes, they're either qualified or not. But all you can do is give them the information on whether that total payment is, what the prices are looking at. And it's a lot of work, but you just pound it. Give them the data.
So yesterday, I had Barry Habib on, and he talked about a strike price, right? Like talking with your buyers to know, like, this is when we're going to, this is your total payment at this rate, we're going to jump on that. And I think what you said just a few minutes ago about how there's not another side to this, there's not like, I think that's something that people really need to educate their buyers on. It's like that, those home prices where are home prices going to fall? In what scenario are home prices going to fall?
Well, there are areas where prices are falling. There's parts of Florida. There's parts of Texas. So there is that. But in that equation, the payment levels matter still, right? So even if home prices fell 5%, somebody might need 4 to 4.75% to qualify. Right. So, okay, this is where your qualified rate is, or total payment is. So there are places where prices are falling, but again, is it theory a buyer's market if rates are this high? Because if it was a buyer's market, then sales would be rising, wouldn't it, in theory? But the rates are just not there. So even in areas that we have seen, Austin is a good example, where their prices have declined almost 20% from the peak. Do we consider Austin a buyer's market? Not really. To me, I see a buyer's market is when prices and rates really, if that comes down, but if rates come down, then you get more buyer's pool. So the total payment variable matters because the qualification matters now more than ever. So even if prices fall or prices don't fall, prices rise, whatever it is, that number matters to the person. So there's a qualification. You could qualify here, but each home buyer has, what's your comfort level? Like, that's how I used to do it. I didn't care about if you qualify. I would say, what is your comfort mortgage payment level that you feel comfortable? I don't care what the bank says you qualify. What's that? They say this. I said, okay, you're nowhere close to buying a house. So this is the reality. Get their comfort level, get the reality price, give it to them. Send them all the time, every week, where rates are going. This is where it's at. And then when they're ready, they qualify, they go. That's how it works. It's just it's very frustrating because prices are high, rates are high. So eventually, if the labor market gets cooler, rates can go down lower. You get a little bit more buyer demand. I don't think we solve this housing affordability issue so quickly like we did back then. And here's a great example. When 2010 and 11 and 12 were here, affordability was great. Right? We had lower mortgage rates and we had lots of inventory and home sales weren't rising, right? So the period in time where affordability was so good, people go, well, why weren't people buying? They couldn't buy.
They didn't have the wages. They were unemployed.
Yeah, they could, it's not so cut and dry. Now it's like, I understand the confusion by some people. People go, well, God, housing is more unaffordable now than back then, but home sales are kind of at the same level. Yeah. Well, we have a bigger population, we have a bigger workforce, we have more households. And what is the biggest factor to defeat housing inflation? Dual household incomes. That's why I used to always say it's rent, date, mate, get married 3.5 years after marriage, kids, single family homes. People don't live in apartments in that kind of structure. Dual household incomes together. Oh boy. And the perfect example I could give you, let's say the NAR says you need 110,000 income. Well, a dual household income in America now, that's not that difficult at a certain age. When you're younger, it's different. right? Your
Yeah.
starting base wage. But like when you're in your 30s, 40s, and 50s, you have two people working, that's doable. So that's how you get near 5 billion total home sales this year, last year. There's still that buyer pool. Again, older buyers, higher wages, more selling equity, more assets. Younger buyers, not so much. But if you look at the first time home buyer percentage, it's kind of been the same for 13 years. If you look at the millennials as a percentage of buyers, they've been the biggest home buyers for a long time. They lost their title for like 1 year when rates spiked up, and now they're back up again. So it's there. It's just not to the levels that what we were before rates and prices rose.
Logan, we are out of time, but thank you so much. Thanks for walking us through the home price growth and why we're seeing that, and what we might see in the near future. So always appreciate you.
Pleasure, Sarah.